Hey guys, what is up? Welcome back to my channel. In today's video, I'll be revealing what's the biggest mistake that stock market investors make and how you can avoid these stock market mistakes. So if you guys have been investing or trading in the stock market for some time now, chances are you have made some stock market mistakes. So we have all made some stock market mistakes one time or another, especially when we were first starting out. That is the case for me when I first started investing and trading in the stock market. Or if you're just starting out in the stock market, I want to share with you some of these mistakes because these mistakes can end up costing you potentially thousands and thousands of dollars. So today, I want to share with you how you can avoid making these same mistakes that me and other investors have made before you and avoid losing your money unnecessarily in the stock market. In this video, I'll first share some common stock market mistakes that investors make and then revealing the biggest stock market mistake. After that, I'll share with you a strategy that you can implement to prevent these stock market mistakes, which can save you potentially thousands of dollars. So make sure you watch till the end of this video. If you are new to this channel and want to learn more about investing, trading, and the stock market to protect and grow your wealth, make sure you hit that subscribe button and turn on the notification bell so that you don't miss out when I release a new video every week. Alright, let's get started. One of the first mistakes that so many investors make in the stock market is not equipping themselves with the right knowledge and foundation before investing in the stock market. I know that a lot of stock market investors start, and maybe this isn't you since you are watching this video now and learning more about investing, but I know of people who put money in the stock market with little to no knowledge about investing and the stock market. They only know about buying low and selling high, and when they buy stocks of companies, they buy them based on recommendations from the news and Facebook groups and so on. When these people buy stocks, they are speculating rather than making logical investments based on financial numbers and figures. They are following the hype and hot tips and thinking about how much money they can make. But instead of making money, they lose money. Many of the recommendations made on the news and online are not very good in my opinion. But let's assume, given the benefit of doubt, that the recommendations on the news and the ones you see on Facebook groups are good recommendations. But why is it that more times than not, when these people with little to no knowledge about investing follow the recommendations which are good and buy the stocks recommended, they still lose money? Let me show you an example why this might be the case. This is a price chart of a company. Let's assume that this company is a good company and it is on an uptrend where its price is increasing over time. Check out this video on the top right of your screen on moving averages where I explain how to determine the trends using moving averages. If the person recommending the stock on the news invested here and he exited and sold his position here, would you agree that this investment is good? You would, right? Because he invested in a good company and managed to make money buying the stock. He bought the stock at around this price and he sold the stock at around this price. So he sold it at a higher price, so it was a good investment because he made money. So how can this stock be a good investment for the person recommending the stock but a poor investment for the person acting on the recommendation? Let's take a look how. We know that the person recommending the stock, let's call the person Warren. Let's say Warren invested here at point A. So Warren held the stock for a while and the price of the stock rose during this time. So at this point, point B, Warren recommended this stock to his audience. The stock was based on good financial numbers and figures and had also rose in price since he bought it. So this stock was a good stock to recommend. Warren believed that the stock is good and the stock has backed his view by rising in price since he bought. So when Warren recommended the stock to his audience, some of his audience bought the stock as they trusted him because he was one of the best investors around and had a good investing track record. So let's say that Joe, a person who has little to no knowledge and was at best an average investor, acted on this recommendation and bought at this point, point B. So after Joe bought at point B, prices start to fall. At the start, Joe thought the fall is just temporary and that prices will start to reverse and rise soon. But as prices continue to fall, Joe starts to get worried and starts to think whether Warren had made a bad recommendation and wondered whether he should have followed the recommendation. So prices continue to fall and Joe can't take the losses and decided to sell his stock and take the loss at point C. So Joe's capital took a beating and he blamed Warren for the bad recommendation. So did Warren make a bad recommendation? Let's take a look. Even after prices has fell quite a bit, Warren still make money on his investment since the price of the stock at point C is still higher than the price of the stock at point A. And on top of this, Warren's investment goal was long-term and he planned to stay with the stock for an extended period of time. So he wasn't overly concerned that the price of the stock fell during this relatively short period of time. And what happens after point C? Prices start to rise and continue to rise. So Warren got out at point D and made a huge profit on it. So can you see why even though some of the recommendations from the news may be good, investors who just blindly follow these recommendations can lose money while the people who recommended the stock make money? Because the people who recommended the stock bought the stock at a different timing and also exited at a different time than the people who buy on recommendation. So the entry and exit timing is equally, if not more important than the stock itself. That is why equipping yourself with the right knowledge in the stock market is so crucial, because with the right knowledge, you are able to do your own research and analysis before you follow a recommendation. If they do meet your criteria, then you can choose to invest in the recommended stock. If the stock doesn't meet your criteria, then you know that it might not necessarily be that the stock recommended is bad, but because you are buying and exiting at different times, and that itself can impact on the profitability of the investment. Most investors don't have the knowledge when they start in the stock market, and it is one of the reasons that they lose money in the stock market. So that is one of the stock market mistakes that investors make. The next mistake, which I believe is the biggest mistake that investors make in the stock market, is not cutting their losses fast. Most stock market investors tend to only take their losses once the losses become too huge and unbearable. These losses eats up a large chunk of their money. Most of us know intellectually that the way to make money in the stock market is to cut our losses fast and let our winners run. But knowing something intellectually doesn't necessarily mean that we will put it into action. We know that when the price of our stock starts to fall, we should look to cut our losses fast. But why do most people not cut their losses fast even though they know they should? It's kind of like how all of us know that to be fit and healthy, we only need to do two things: eat healthy and exercise regularly. These two steps are so simple that everyone knows about it. But why are there so many people out there who are not fit and healthy? Because our emotions get in the way. We might feel lazy or just want the instant gratification that unhealthy food gives us. These emotions trumps our logic. So it is similar when we are investing in the stock market. We know that we should cut our losses fast, but we hold on to our stock out of fear and greed. This is the biggest mistake that stock market investors make, and the one that has caused many investors to lose thousands of dollars. How can you and I, as investors in the stock market, avoid and prevent this mistake? The strategy that I have implemented that has helped me tremendously and has the potential to save you thousands of dollars is to use stop losses. Always place your stop losses together with your buy order. What are stop losses? Stop losses are orders that you want to place when you buy your stock. So when you're buying your stock, you have to place an order with your broker or on the trading platform that you use. Once you have confirmed the price that you want to enter in and the amount of shares you want to buy, you will then submit your order and your broker will execute the order for you. Having a stop loss when you enter your position in the stock market means that instead of just submitting your buy order with your broker, you also create an additional order for your broker to execute on your behalf. Your stop loss is an order to help you sell or exit your stock automatically once your stock reaches a certain price. For example, if you bought a stock at $100, you will place a buy order at $100 with your broker. Having a stop loss means also placing a sell order on top of your buy order. So say if you place your stop loss at $95, What this then means is that if your stock does not move up above $100 but instead fall below $100 and maybe even below $95, having a stop loss ensures you cap your losses to $5 and the maximum amount you can lose is $5. This is what a stop loss does. It helps you cap your losses. So the biggest mistake that stock market investors make is not cutting their losses fast enough. And the strategy to combat this expensive mistake is to have stop losses whenever you buy a stock. I hope you guys have found this video helpful, and if you did, give us a thumbs up and subscribe to my channel down below. I definitely have more tips on improving your investing and trading in the stock market. So if you guys want to see videos just like this, just strict tips on how to improve your investing and trading, let me know in the comment section down below. I can create videos on those tips. I'll see you in the other videos. To your financial success.